Hi, my name's Mark Wall. I'm the President and CEO of Mountain Province Diamonds, a TSX listed diamond producer and explorer. And today I'll be taking you through our corporate presentation. Firstly, I'll draw your attention to our cautionary and forward-looking language. This presentation is posted on our website, and if you'd like any further time to review this, you can find it there. So, Mountain Province Diamonds. We are a Canadian producer of diamonds, the fourth largest diamond producer by production in the world, in a joint venture with De Beers. We're in a diamond market that, as with all commodity markets, ebbs and flows. It's currently in a strong position. We've got an operation that has lots of organic growth potential that we're busy working on with our partner, and we have some really good environmental practices and environmental work that I'll speak further to in a few moments with communities around the area that we operate. We've currently got a market cap that, when compared with our earnings, is quite low. So last year we had an adjusted EBITDA of $177 million. And we're sitting with a market cap of around $100 million. Some of the operating statistics, you'll see we have a strong margin business. And when compared to other companies, our margin is very strong. We maintain that by focusing on the costs, obviously, and trying to maximizing our throughput production at the asset. Our price to trailing 12-month earnings, again, is very low. And these are all things that we're working on as we get out there and we speak to investors and we try to educate people about our company. Where are we in the world, and where are the largest diamond mines in the world? There's a number in South Africa. There's several in Russia, and I'll speak further to that in a moment. And there's several in Canada. And the joint venture between us and De Beers, which is a division of Anglo American, is close to the Ekati mine, which is operated by Rio Tinto in Canada's Northwest Territories. The margins I've already spoken to. This is a strong margin business. We all know that margins are driven by volume and cost, and they're two areas that we continue to be very focused on with this operation. We reviewed our 43-101 that's submitted in Canada in early 2022, and the pre-tax net present value of our share of the operating asset is around 1.2 billion Canadian dollars. So there's a lot of value in that asset. That doesn't take account of the growth opportunities that we're currently right in the midst of looking at to extend the life of this mine. The diamond market is really operated. I was in Antwerp several weeks ago. It's like most commodities, it moves through cycles. There's different times of the year that it's stronger and weaker. In a macro sense, the market is in a strong position, and we think that the underpinning aspects of the market are good. Now, what are they? Well, we've got our partner De Beers produces around 1/3 of global production. Global production is 110 to 120 million carats or so. Several years ago, it was 150 million carats. So production is going down, and it's going down because diamond ore bodies are quite difficult to find, and setting up new mines is not easy. We've got around 1/3 of the production globally comes out of Russia. There's currently a lot of self-sanctioning going on in the US markets around that production. And that is certainly a tailwind for diamond price. There's the risk of synthetics, or what I call factory-made diamonds, out there that is spoken about very often. What we're seeing is the pricing of these goods is getting lower and lower, and it's becoming more disconnected from the natural product that we operate in. On the ESG side, there was an award that was the mine earned in 2022, which was a joint environmental monitoring program with the Nihari Ha, and it involves Indigenous groups who come and monitor all of the things that the mine does in order to make sure that it meets their expectations. Nihariha is an indigenous word that means watching the land. There's strong relationships with the community, and De Beers and Anglo American are very focused also as our partner on environmental and sustainability practices. Looking a little bit at what we see as the future for the mine, what you can see here is the pit shells of the open pit. This is currently a conventional truck and shovel operation in an open pit with a mine life sometime around 2030. We're looking at the underground extensions for these ore bodies, and we're drilling them as we speak. And we're coming up with ways that we could transition to being an underground producer that would potentially add somewhere around 10 years to the mine life. That work is ongoing. It's also worthy of note that the other two mines that are close to us, both diamond mines, have already transitioned to this underground production method. We also have a large property around 113,000 hectares that completely surrounds the Gahcho Kué mine. On this property, there are 3 existing kimberlites that have been delineated. They are the Kelvin kimberlites and then the Faraday camp of kimberlites. All up, there's around 20 million carats of indicated and inferred resources. And we're looking at opportunities to integrate these into the mine plan, especially as we look towards an underground scenario in the future. So what are we doing as a company? As all mining companies should be doing, we're always working on trying to optimize the business. How do we make safety as good as it can be? How do we focus on the environment and sustainability? Also on operating costs, performance at a truck level, at a shovel level, at the mine. We're looking at growth. We're looking at growth both from underground as well as growth from the broader exploration properties that we hold that surround the existing infrastructure, which is around $1.1 billion, which was spent building the process plant, the airstrip, the camp, and other related infrastructure like power. And we would look for other deposits that under a hub and spoke type arrangement, we could feed into that existing infrastructure without spending additional capital building another processing plant. The capital structure, we refinanced our debt at the end of last year, $195 million at a 9% coupon. And then we have a $50 million third lien facility that sits behind that. And we're currently in the process of paying down that debt. We paid $12 million down year to date, and we'll continue to drive that debt to around a 1-to-1 debt to EBITDA ratio, and then look at and consider our options. We run our own sales and marketing shop, and that's very successful. And we will continue to look at ways to optimize the sale of our products into the market. In 2022, we got a lot done. As I said, we refinanced the debt. We updated our technical report, which added significant value. We discovered this underground extension, and we're in the middle of drilling that opportunity to see what it can do for us. We had a strong EBITDA in 2022 of 177 million, remembering that in Q1 of 2023, we also had $67.5 million of EBITDA in that quarter alone. The outlook of the industry, as I've said, the diamond production market is under pressure. There's not a lot of new mines coming on stream. The production out of Russia into the Western markets. Now, the US makes up 50, even towards 60% of the global consumption market. And there's been a great deal of self-sanctioning within that market. We also look towards China reopening. China is a strong market as well. And so we see good future in the diamond market as we're seeing a decline in production. And we think we've got great opportunity to find additional kimberlites on our exploration property, which is adjacent to the existing infrastructure. So to throw all that together, we have a great partner in De Beers and Anglo American. We're in a great jurisdiction, Canada. It's safe from a geopolitical perspective and stable, good regulation. We have really good growth potential, strong community engagement, a lot of focus on spending money on suppliers that are from Canada's north, as well as Indigenous suppliers. We've really got a strong NPV in the company, and we think that we have a really, really bright future as we continue to operate in Canada as we are, and we continue to explore to find new ways to grow the life of this asset. So that essentially is Mountain Province Diamonds. Thank you very much for listening. We're always happy to connect with investors and potential investors and explain more about our story.